All right, everybody. Stocks by the numbers. Welcome back. Disney, ticker symbol DIS, listed here on the New York Stock Exchange. Stock at 97.28, down about 71 cents, about 0.75% here on the day. And in my opinion, I think we go lower and we pull back to the low 90s and potentially retest this last key level we were at about 90, potentially sub 90 over the next coming weeks. And I'll explain why. So, first of all, looking at the numbers here, recently the stock took a hit here early May when the earnings came out, and we can see the company missed on the revenue side, but they beat on the EPS side. And we can see that this trend has actually been pretty persistent over the last several quarters. And if we go back even before that, you can see again, beat on the EPS side, light on the revenue side. Beat on the EPS, light on revenue, and again, beat on the EPS, light on revenue. So during this whole time frame, this is when, they were going kind of extremely woke. People were kind of bashing them on social media. People were talking about potential boycotting and whatnot. And of course, again, because the earnings started to come in mixed and it wasn't necessarily a consistent winner like it was several years ago, the stock started to take a big hit going from, I think it was, it was over 200 at one point, and it drops all the way down to new lows 78, 73, right? This was back here at the tail end of 23. Then all of a sudden the stock starts to gain momentum and climbs all the way up above 120. And I know some people came out, they raised their price targets back up 130, 145. So I appreciate the fact they're kind of playing into that whole rebound story. But in my opinion, it did kind of run up kind of for silly reasons, if you will. And like I always say, in my opinion, I like to follow the money, I like to follow the revenue, I like to follow the actual business, and technically right now, the business seems to be struggling in my opinion. So it looks like what we're seeing here is the fact that the revenue is kind of slipping, they're getting a lot of backlash, so what do? They try to pump up the profitability side because they know that the revenue side is going to come in light. And again, you can see over the last 4 quarters, the EPS has been coming in above estimates, and the revenue has been light, missing that mark now for 4 quarters in a row. And only recently, back in first week of May, roughly 2 months ago, the stock finally took a hit after coming in light on the revenue side. And now we're back at this trend line here. So basically the fundamentals here, before I get into the technicals, right now we have market cap of about 177 billion. We're paying a dividend yielding at about 0.75%, and our PE now has skyrocketed back above 100. And if we come down, we can see again, the EPS has been solid. Over the last couple of years, revenue has increased, but in my opinion, I think that's just mainly because of price increases across the board. But revenue has been climbing up nicely. It went from the high 60 billion mark. Now for 2023, you can see they closed out at about 88.5 billion. But if we switch over quarterly, we can see also that even though they have been potentially coming in above estimates on the EPS side, the net margin has been taking a hit as well. And you can see back in the middle of 2023, we had a net margin percentage close to 6%. Following quarter, we go negative 2%, come back up to 1%, shoot up to over 8% 2 quarters ago. And now as of last quarter, almost break even. The company lost about 20 million there in that quarter. So this is why, in my opinion, I feel like the company overall is struggling, but I also know that there's a big demographic out there who is familiar with Disney. They like the content that Disney brings, or used to bring at least, and they're basically seeing the fact that the stock was up at 180, 200, now it's sub 100, right? So they're potentially looking at a brand name company at a discount. But in my opinion, I do think it continues to struggle. And again, the market cap 177 million. So if we do just a little simple arithmetic here and just kind of look at the quote unquote fair value, the way I like to personally look at it, we can see we have about 88.5 billion that came in last year for revenue. If we come down, we can see the debt was up to above 60 and has been slowly pulling back over the last several years. So at least they're trying to get their debt in line. Here in Q4, it jumps back up to above 50 billion, and it's slowly pulling back over the last couple of quarters, 46.3 billion. So 88.5 billion minus 46 billion in debt, that would bring us to about 42 billion. Also, you can see the free cash flow has actually improved from this time last year. You can see back in Q2 of 23, free cash flow about 2 billion. Now it's at about 2.4 billion. Look at the cash though. This time last year, almost 10.5 billion cash on hand, and it was climbing up and then recently took a hit. You can see going from 14 drops down to about half of that, down to 7, down to sub 7 at 6.6 billion. So right now we have what was that number? About 42 billion plus 6 brings us back up to about 48 billion. And now if we come over here and we can see we have our assets, we have our liabilities, assets minus total liabilities yields total equity. And you can see the equity was bouncing around, looked like they tried to maintain that 110 plus billion mark and recently dropped down to 105.5, 103.76. Now the book value per share took a hit and it was slowly climbing up here from the 53s up to above 54. Drops down a full point, over a full point to 53, back up over a full point to about 54 1/3. So that is technically a decent move. However, looking at the equity here again, 103 billion, our number was what, about 48 billion. So now if we add up the total equity with revenue minus debt, that would bring us to about 150 billion. In my opinion, that is really fair value in my eyes for the Disney company. And we can see the market cap here, 177 billion. So this is why, what are we looking at? We're looking at about maybe like 1/6, 1/7 potentially we could drop here. So that's about a 15% drop, give or take. And in my opinion, I do think it's coming. And that would bring the stock down to about the mid 80s actually. But realistically, again, even though there are people buying this dip, and I do know again that some analysts came out and like we said, they have price targets 130, 140. This is why I don't know if it'll necessarily come crashing all the way back down to this line here at 80. So that's why we might see, you know, the low 90s here, maybe 92. We might get to 90 and then we might start trying to bounce again. In the numbers, again, I'm expecting a little bit of a sell-off, but if it doesn't completely crater down and then eventually bottoms somewhere here and then starts to climb back up, I guess I can appreciate that. But also we have earnings coming up here roughly the first week of August in about 4 weeks. So in my opinion, after chunking the stock up, after they technically missed on revenue, if they come out in roughly 4 weeks and they miss on revenue again, then in my opinion, I do think it's going to get smacked up again. And we could potentially see the mid to low 80s inside of the next 4 to 5 weeks after earnings. So if you're looking for a quick play and you want to jump into some puts and you wake up over the next day or two and it drops down, you know, to 96, 95, obviously, like we say, in my opinion, in and out, traders market, secure the profits. If you're able to buy a little bit more time and you want to buy, you know, 2-3 months of time on some puts and you want to give it several weeks after these earnings come out in about a month, that's entirely your own prerogative. But looking at the technicals here, I want to show this was a resistance trend line. This is going back from the tops, August 16, 2022, connecting to the top there, February 9th, 2023. And you can see that the stock was slowly starting to climb up early 24. Then these earnings came out and they catapulted the stock above this top resistance trend line, which is why, in my opinion, it continued to climb up to above 120. Then we start to pull back, the earnings miss, we chunk it down, we're channeling it down. Now we're back retesting this resistance trend line, which is now technically support, right? And we can see that the stock is now below this trend line. So if we zoom in a little bit, this is what I want to show you as well. So recently we had a big drop here. It was about a week and a half ago, tail end of June right here, the 28th, and you can see the stock really started to drop down, and over those 2-3 days there, drops all the way down to retest this support level, the old resistance level. Then we have a bounce, right? It's trying to hold, and you can see recently today, it broke back below it and keeps rejecting, in my opinion, what looks like that trend line. So if we draw some trend lines across here, you can see that right where we stop here and at the bodies of these recent candles could potentially be our flat bottom. And if we connect from the highs here, again, this was as the stock was dropping. This is going back to June 28th. And if we connect and bring it down here, to the high today of July 8th, 24, you can see that we have a potential descending triangle that is taking place. So not only are we now back below this resistance trend line, which it was trying to hold, now we're back below it. So if we close below this trend line, in my opinion, that's bearish. Also, we have a potential descending triangle lining up, which again is potentially bearish. And if we go out to the apex, we can see that this could potentially hit the apex and break down below this descending triangle. This could potentially happen tomorrow, late morning, maybe about 10:30, 11 o'clock, right? So if that happens, again, that's why I mentioned this in the Discord, and this is why, in my opinion, with the way these technicals are lining up, if we come back down, even here, you can see like the recent highs as we were channeling downward, you can see that we're looking at about low 94s, right? So that's why this could be good for a couple of points drop here. And that's why if this descending triangle does come to fruition and we break down, this is why I'm saying if you happen to get in some puts, it may work out very well for you. But the fact that, again, it's back below this resistance trend line and we do have the potential descending triangle, in my opinion, again, based off of 4 earnings in a row as well, missing on revenue, this is why I think we could potentially break down and start dropping down to these fibs, 95 and a quarter, maybe about 93 and a half. But overall, the vibe behind Disney, if you've been on social media, the vibe is pretty negative. So people are kind of starting to get upset. Well, I mean, they already were upset a couple of years ago. But now they're getting even more upset. The videos coming out supposedly of the Disney insider talking about how, oh, we don't hire white people for this, or, oh, we can't have a male for this role, we need to find a female, or, and really what it comes down to is people are just kind of being, they're just getting fed up with this whole DEI kind of push in all aspects of our world, our business, our economy, our society. It's everywhere you turn now. So people are now slowly beginning to, of course, we have boycotts still on the table for certain companies, but at the end of the day, people are basically just kind of voting with their dollars, if you will. And this is why I think that, in my opinion, this is why we're seeing some light revenue come in on Disney lately. So I have a feeling a lot of people are moving away from Disney, but also I heard, I mean, of course, everyone's entitled to their own opinion. I'm sure some people liked it, some people disliked it, but I have heard also recently, I personally didn't watch it, but I have heard that the new Star Wars kind of ticked a lot of people off. And that's why we had the video come out with the person saying, oh, we don't hire white males or whatever it was. And then you have the Star Wars come out and people are upset saying that they kind of ruined the story. They ruined the franchise. It's not what they were expecting. So this is why, in my opinion, I just feel like right now there is just a lot of negativity surrounding Disney. And also with the technicals lining up. This is why I'm saying, in my opinion, over the next couple of weeks, over the next couple of months, we could potentially see Disney drop to the low 90s and potentially back into the 80s. If we switch over to stock charts here, in my eyes, the only thing that could really potentially show this stock some life here is the RSI. As we see on the daily, the RSI down here at 32, and you can see the last time it basically approached 30, it had a little bit of a bump up that was basically right there, trying to retest that 200-day moving average at about 98.70, but we had the rejection, and it looks like it's just kind of riding down the bottom Bollinger Band here. And the bottom Bollinger Band here, 96.77. Stock hit a low, 96.89. So in my opinion, it may continue to just kind of slowly step down, and you might have the occasional little pop-ups as the RSI really hits that benchmark. But also, we can see that as we did have the big drop to start off the month and break below the 200-day, that caused our MACD to cross to the downside, and it looks like we may continue to keep pulling back a little bit, which is why I'm saying, in my opinion, Disney puts here in the short term may work out well. And if we look at the weekly, though, we can see the RSI still here at 42 and a quarter, right, after being really topped out several months back. So this is why we can potentially continue to sell off here, in my eyes, and get back down to that 30 benchmark. And if we look, we can see our 50-day moving average 96.67, and again, the stock hit a low so far, 96.89. So in my opinion, it recently looks like it retested that 50-day, and I think it's going to happen again. And with the potential descending triangle lining up and the negativity surrounding it, a breakdown to this bottom Bollinger Band on the weekly of about the low 93s could be very feasible, in my opinion. MACD looks like it's just been slowly pulling back and dragging down for the last couple of months on the weekly. But let's check the pivot points real quick and I'll let you go. But overall, in my opinion, like we say, we try to look at a lot of the numbers, we look at the technicals, and we look at kind of the overall vibe of the business itself, how people are receiving the business, what are people saying about the business, are people pumped about a new movie or a new product that the company's making, are people, you know, again, boycotting, are they giving backlash, are they lashing out? So that's why basically looking at the overall broad picture here, in my opinion, Disney just a little more negative than positive. But looking at the pivot points here on the weekly, we can see next pivot point down at 95.08, which you can see that as it approached and paused here for a second, it came down to retest, and then it really went on a run about 3-4 months ago. And that's why now, as we're coming back down, if we do retest this 95.08 pivot point and then close below it, I think it's going to get ugly. And I think we're going to see those low 80s again. Of course, again, earnings in about 4 weeks. But let's look at the daily real quick. And we can see that it recently tried to bounce off of about that 96.5 level. 96.54 was the pivot point. And you can see that it bounced, almost formed what looks like a bull hammer. And then we had the big pop up there with the RSI as well, mixed with the bouncing off of the pivot point, tried to retest the 200-day, and then we had the rejection. So in my opinion, I do think it retests this pivot point, and then we have the 95 mark on the weekly, and then we have this 94.25 support level mark on the daily, with the MACD kind of pulling down as well. So that's why, in my opinion, I do have to kind of stick to my guns here, especially with it being below this trend line now, and I have to say that it does kind of look like some cloudy weather potentially coming for the Disney company. But again, everyone could potentially look at the situation different. Some people may have saw that video about who they hire, who they can't hire, and you might not have, it might not be a big deal to you, right? Other people may have seen the new Star Wars, maybe they liked it, right? Again, I personally didn't watch it. I'm just going off of kind of what I'm hearing online from other people, and it seems like more than half of the people, the majority of people, seem to be upset with Disney right now. So that's why I wanted to make the video. That's why I said, in my opinion, look for Disney puts maybe over the next couple of weeks. I mentioned it in the Discord. Again, Discord link in the description of every video. But that's pretty much it, because I probably talked too much. So I'm going to end it there. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for your time. Have a good day.